And in terms of payback period, I hear that mentioned. Would you be able to explain that a little bit? And why does Illinois have a shorter payback period than, let's just say, a state like Arkansas?
Sure.
What is payback period, and how does that affect these solar proposals?
Well, it really comes down to the incentives. Some states only have the federal tax credit, and a lot of times it's 30%. That's it. And then they're allowed bonus accelerated depreciation. So in some states where they have better incentives, that helps turn that ROI and payback much quicker. So Illinois has some of the best incentives in the country. So it's, for now, it's a good time to maybe take a quick look at it. But yeah, that the other component we didn't really mention is that we can have the power company fund that entire project. So that example, the folks that just signed that project with the 1.7, they decided to use their own funding and finance it. But we also have power company funding that can fund it. So they submit a couple years financials to the power company, our partner, and once they're approved, they sign one agreement with the power company that has all the scopes of work for the EV chargers, all that, the solar, the roof, everything. So they only sign one document, and then they don't pay anything at all until it's fully completed. So if they were to use the power company funding, they'd sign the paperwork, they'd pay you right away to get the roof going and get all that done. They'd pay the permits and engineering. They'd order materials, get everything going and line up everything.
And the power company is doing all of that?
The power company will fund it all. So, so then the only payment you make, they usually do 60 payments, so it's 5 years, but those payments don't start till the project's fully completed. So it might be a year before you have to start making those payments, and they're a line item right on the power bill. And you make the payments, but that's in that first year that it's 80% completed, you get a huge chunk of money from the tax credit right off the bat. Okay. And then, I mean, you can transfer those tax credits between entities and owners, no problem. It's they're meant to be, you know, exchanged, and you can also sell them. There's a market for them. People want to own the tax credits, and they've got extra money to burn, and they'll pay 80 to 90 cents on the dollar for those tax credits.
Really?
So it kind of gives a lot of flexibility, but yeah, and that power company funding doesn't show up as any kind of a loan to the company. It doesn't show up on any credit report. It's a private power company agreement to pay back. Okay. So we've had some companies get a brand new roof and solar, go to their bank and say, look, we just put $2 million on our roof, and you know, we want to increase our line of credit. And they run the numbers, and sure, yeah, well, and they increase the line of credit accordingly. But yeah, it's a real nice service. It seems weird the power company would pay for solar and your roof and everything, but I don't know all the reasons. But in the background, they have goals to help businesses be more energy efficient, and so to do that, they pick, you know, just a few contractors that they've had a relationship with for a long time, and our group has had that relationship. So they don't just fund roofs and solar for just anybody up and down the street.
Okay, so you have to have that relationship. And if you could touch on a little bit more about your group, really how you guys been able to excel in this space and have these tight-knit relationships to have power company funding.
Well, they started in 85, and I'm kind of the sales guy that goes along with it. But in 85, they started focusing on any kind of energy saving thing. So natural gas and electricity and whatever was coming down the pike. And they were also really good at finding incentives. So when there's an incentive for something, that helps the customers out. So they've, over those years, have gotten really good at making sure they incorporate all these incentives. And it sounds tricky because it's government and paperwork and all that, but our group fills out all that paperwork. And so you don't have to worry about filling out any of those incentive paperwork things and applications for this and that. We handle all of it.
Okay, and then as an owner of an industrial building, what is the number one most important thing about the power company funding and how it benefits them?
Well, I just think it's another option.
Okay.
You know, yeah, this has a pretty quick return versus some things, but maybe not as good of a return as buying a new piece of machinery that you can turn on and have it really start paying itself off.
Right.
So a lot of folks choose to use the power company funding. So they can use their capital for whatever else they need to do.
Okay, so then they can offset that capital and maybe buy another building, buy some more machinery, or put that money towards other capital expenditures to help them expand their
Exactly.
business.
Yeah.
Okay, that's super interesting.